Time for another stock review. One of my favorites, Google, ticker symbol GOOG. Why is it one of my favorites? Because here comes the boss. Yes. Google own YouTube. YouTube reached out to me and said, hey, Martin, take my hand. Would you like to be our #1 channel on YouTube? I went, yeah, all right then, mate, I'll do it. So I started working out the numbers, working out how all this YouTube works, and here we are today. Can we make money with this stock? Well, we're going to look at it. We're going to go over the information, and we're going to see if we can pile up our money, because Google is the owner of my boss, which is YouTube, and this is how I make my living. So I'm always keen on how Google is performing. I own Google, of course, for the S&P 500. I'm 100% in the S&P 500, so you know my reviews are impartial and unbiased. This is a review asked for me by one of our members. If you are a member, it's only a couple of bucks a month. It never goes up in price, including inflation. It actually goes down. For $5 minimum, you can ask me to do a review. Not only will you get a full review like this, I will then put it out as a video and it will rank on YouTube and Google, and it provides a service to many others. And if it's a small company, it doesn't really work so much for Google. It can actually promote the stock. Google, I think enough people know about it, don't you? All right, they don't need me to promote it. All right, so let's get into Google. What's it all about? If you like stock reviews, please do tap the like button and consider subscribing to our channel. And there you go. There's a subscribe button. So, Google, what is it? Well, in this review, we're going to do quite a few things. We're going to show you the basic information, plus we're going to show you the intrinsic valuation. We're going to show you the inside trading, the margins, the financials, the balance sheet, how it looks. And I'm then going to go over to its different latest news around the stock, what's going on in the space, Anthropic, talking about the valuations, talking about the overall analysis at the end using some AI software, looking at the chart over time. You can see how it's done well over time, but it does have some volatility, of course. Back in 22, remember, we fell off a cliff. We're doing that again today. And how it compares to the S&P. And yes, it has a dividend element to it as well. A new thing. We have a dividend position as well with this. This is new. Only been out a short while. In fact, it's its 4th quarter. So just 1 year. A new thing here. So let's get straight into it. Let's talk about a Google review and see if it's worth buying right now. Well, we know right now, as I'm making this video, it's March 11th and it's 13:40 Central Time, as you can see just beneath me on the screen. We've had a massive sell-off of tech recently. The Mag 7 is no longer the Mag 7. It's the Lag 7. They've let the S&P down because they were very high multiples, 23, 24, 27 times earnings. They've all sold off. But before I even do my review, I can tell you that Google has been one of the better value ones, right there with NVIDIA. Top of the pile for me, very expensive, is Microsoft. But Google is one of my favorites, not just because I'm employed by YouTube, it's just a fact. So let's go into it. Tap the like button, here we go. Let's start with this. Well, we're going to keep it nice and simple, but we are going to go through all the details. My member deserves a full review, not just, well, it's Google. You know what it is. No, let's do it all properly. Google is a holding company which engages, oh, by the way, this is Google GOOG. Now, this is C class, not the, is it B class or A class? I can't remember now. But anyway, the most popular one to buy, and it makes no real difference, is Google Class C, GOOG. Why? Well, the other one, and I can't remember now if it's A, B, or whatever it is, it's exactly the same, slightly different price, but the same growth pattern is exactly. You get voting rights. Simple as that. You're on the board and you can vote. Technically, doesn't mean anything. This is the one that retail investors buy. GOOG, Alphabet Class C. Okay, it's quite complicated, but don't make it complicated. Just buy Class C, and this is just the regular stock which you can buy. No big deal. Don't be confused. All right. You're not going to vote anyway, are you? You're going to turn up and vote? Maybe you are. Anyway, it operates through the following segments: Google Services, Google Cloud, other bets. The Google Services segment include products and services such as ads, Android, Chrome devices, Google Maps, Google Pay, Search and YouTube. There's my boss right there. Got to be nice. Got to be nice. The Google Cloud segment refers to infrastructure and platform services, collaboration tools, other services for enterprise customers. The other bet segment related to the sale of healthcare-related services, internet services. The company was founded by Lawrence E. Page and Sergey Mikhaylovich. Probably wrong. I apologize. Brin on October the 2nd, 2015. Boy, it sounds... You feel like Google's been around forever. 2015, 10 years. Think of it. You think Google's been around forever. No, it ain't. 2015. It's amazing when you think about that. It's one of the biggest companies, best companies, solid. You think, blimey, 10 years? Is that all? That's all. Headquartered in Mountain View, California. This name is GOOG. Alphabet Class C, capital stock. There you go. Capital stock. That's what C stands for. It's just the regular stock. Sundar Pichai is the CEO. Now, if you'd like Sundar on the show, we're going to the top now, getting the CEO of Google on the show. It's completely doable. Absolutely it is. My CEO, so they prefer being here than Bloomberg. That's what they told me. If you were email investor relations and say you are an investor in the stock and you'd like to hear from Sundar could reach back to you and eventually you can put him in touch with me. Why not? Think big. I always think big. Why not get him on the show? We're going to have Elon on the show one day. Volume, 15 million. Today's volume. Average volume, 19 million. That's quite low at the moment, isn't it? Anyway, there you go. Market cap, 2.03 trillion. 52-week high, 208. 52-week low, 137. PE ratio, 20.86. Nearly 21 times earnings. It was a lot more. It's now 20 times. Dividend yield, 0.36. Well, we're looking at the PE. Let's look at the forward PE. The forward PE is, why this is important, going forward, 18 times earnings. And let me put that into context. 18 times earnings. Remember, we looked at Palantir 700 times. For a tech stock that leads the world, 18 times earnings. Is it that bad? I don't think so. We'll come back to those figures in a moment. Good value. In my opinion, you're buying a great stock. You're buying a great stock. You're buying a great business. You're not going to get it cheap, are you? It's good. PE ratio is getting good. Let's scroll down. A strong buy from Seeking Alpha. From Morningstar. They're paid to say it. Bulls say Alphabet has a huge opportunity in the lucrative public cloud space as a key cloud vendor to enterprises looking to digitize their workloads. The Bears are saying regulators around the world are keying in on Alphabet's search dominance and could upend the search market through the imposition of deep structural changes in the search space. That is true. They faced lawsuits before and they've won, so I'm not too worried about that. What about this? Don't really care what Robinhood investors are doing. They don't move the market on this stock, not at all. But we do care what hedge funders doing. Hedge funders have been selling this recently. More back in Q1, getting less now. Hence, I think we're bottoming on the market. Expect them to be buying again soon. Insiders buying of recent. But don't get too excited. 1 million, nothing. That's probably automatic buy-ins, nothing at all. No big deal. 1 million is nothing for this company. So don't get excited that insiders are queuing up to buy the stock. I can tell you who they are if we look at it closely, but really, there's no big deal there. Uninformative buy. Can you see that? Uninformative buy means automatic buying. They've got their setup sort of all organized and they're just automatic buying. It's no big deal. Don't think of that as hey, the insiders are buying, let me start buying. It doesn't mean that. Economic moat wide. Well, that's because they're a tech company and they dominate, which means their margins are sky high. No surprise there. That's why it's a good business. And they're not really in that much competition with anyone. There's only a few players in this space of their size anyway. Fair value, 237. And we know the price now. I'll just remind myself, 237, 167. Yes, we can see today how it's rallied on all of this uncertainty in the market. I am in the S&P right now. I own Google right now. I've been buying the dips right now. I'm in margin, been buying the dips right now. In 9 days' time, I'm going to have even more money. I'm going to be buying more. So yes, it's a buy from, I can tell you without even reviewing this is already a buy. I've known this for ages. This is no surprise. So a bit of a spoiler. I've jumped to the end of the review already, telling you it's a buy. Clearly it's a buy. There's not much doubt about that. Uncertainty, medium. Stewardship, exemplary. Yes, obviously doing a great job there. Look at the earnings. Outperform. Q1 of 25, I'm expecting to outperform and beat again. Everything points towards that, so that's good. Scroll down. Well, we know who else buys the stock. Amazon, Microsoft, Meta, Apple, all the solid blue chips. No issue. We don't even need to look at that. We're not interested in, if Mullen's on the list. It's too big. It's not important. So there we go. That's the beginning of my review. Now let's move on. You can see the growth over time. We're in a downtrend right now, but it's all to do with tariffs, uncertainties. It doesn't really affect Google at all. But people sell the overall market, so the Mag 7 gets slammed. Just the way it is. Don't be concerned about it. Please tap the like button if you like this review and consider subscribing as well. Let's go and look deeper. Now then, let's start by looking at its dividend. Now, why is a growth company offering a dividend? Well, and why do they even bother? Such a small amount, who cares? But it kind of... It incentivizes people. It's when the stock grows up. When the stock has had its huge growth, which it's had, the whole world's using Google. It can't grow and grow forever, can it? It's not a growth stock forever and ever because everyone's got Google, right? You're always trying to grow it, but there's only so many people on the planet and everyone's got an iPhone, everyone's got Google. So how far do we go? There's always emerging markets and growth, and YouTube is growing, and I see that for me. But, they're now growing up and offering a dividend. So it attracts a different type of investor. There are certain institutions it unlocks when you get a dividend. It unlocks other investors who are only dividend investors for their clients who want a dividend. Why? I don't know. You can just sell a stock whenever you want. Selling a stock is the same as getting a dividend payout, by the way. It's still taxable. It's not free money. Anyway, 20 cents, 20 cents, 20 cents, 20 cents. There it is. Not a lot, not going to make you rich, but there it is, and it's paid out all 4 times in a row. What we want to see now is, will it increase the payouts going forward, and will it consist of payout? I don't see any issue with it being consistent, but will it increase over time? We just don't know yet. Probably will, just don't know yet. Well, how does it compare to the S&P 500? Well, if you've gone back to 2016, so 11 years, you can see that if you put 10 grand in Google, you're 4x, 4.5 times. The S&P 500, 3.3 times, 33,000. So it's outperformed the S&P, but can you see how much more volatile it is? Right? There's the S&P in green, there's Google in blue, but it's outperformed. But it can drop very quickly. It's one stock, right? I like Google. It's a big part of the S&P. It's a big part, like the 3rd or 4th biggest part of the S&P. So you own it anyway without the volatility. You might like the volatility. You might like to buy the dip, sell the profits. That's up to you. Some people do. Nothing wrong with that, but you pay tax on that. I prefer long-term investing, and I'm happy. And this is over the S&P period. That's short-term. 9 years is short-term. I'm looking 20, 30 years. All right. Anyway, it's outperformed the S&P. Very good. And yes, that is reinvesting the dividends of both. Obviously, this has only had a year, but this is investing both. Okay. The chart, you can see it's had great growth, but we can see in 2022, it fell off a cliff. It's very much like what's happening now and expecting another bounce. Why I've been buying it again, not just for that reason, but in fact, very little to do with that, actually. It's more to do with the fundamentals. I don't really care what this says, but it's worth knowing it, though, right? We'll come back to that in a minute. The factor grades, the ratings. If you like alpha spread, seeking alpha, there are the links in the chat. For the rest of you watching this live, you can actually see it underneath the video in the description. You can see how the market is coming back up again. Let me show you. Google is doing very nicely today. It's definitely a buy, 100%, no question about it. I don't even need to get to the end of the review. Look at that. We've turned green again. What a day that is. Some people made a ton of money this morning buying that dip. Blimey, did they make a big, what a V shape that is. Anyway, wow, that's all to do with the tariffs at the moment in Canada. I would have bought that dip if I had the money. I was looking under the sofa this afternoon for money. But anyway, there it is. Can't buy every single dip. It's physically impossible. Don't care who you are. So the factor grades, buy, hold. Yeah, solid. Valuation, F. It's expensive. Many multiples. But 18 now. This hasn't updated yet. It's better than that. Growth, B. Profitability, A+. Software company, dominance, B-, B+. Good. Just expensive. Well, you buy the future price with Google. I am very happy to pay this price. So I like that. We looked at the forward PE. I showed you that. Short interest, none. 0.79. You can't drive this down now. It's ridiculous. Who's even selling it now? I've no idea. Forward PE, 18 times. I'm okay with that. I am completely okay with that. Anthropic. Now, it's all about whether Google, Nvidia, and all its other customers are still spending money on AI. People have been worried. Is the AI bubble burst? No. Look at the balance sheets for Nvidia, Meta, Google, Microsoft, everyone. They're all still spending. Nothing wrong with it. We're just in a growth scare, and we're also in a situation with tariffs. No one knows what the bloody hell's going on. But no question about it, they're still spending. Anthropic reaches 1.4 billion annualized revenue. Artificial intelligence startup Anthropic has reportedly reached an annualized revenue of 1.4 billion of earlier this year, according to the information. Its annualized revenue is up 1 billion at the end of 2024, according to the report, which cited people familiar with the matter. If the creator of the large language model Claude can maintain this momentum, it could easily reach its base case scenario of 2 billion in annualized revenue by the end of 2025. Its peak revenue projections of 4 billion will require a great acceleration. I love it. This whole sector is strong, in my opinion. If you don't believe in AI in the future, then fine. You don't like all this, but I do. I absolutely do. Snowflake in discussions with Google for AI deal. Databricks also interested. More companies spending money in this space. I don't need to go into all the details of this, otherwise this review would be an hour long. But I like it. Let me show you the numbers, and then we'll look at our AI software roundup of this stock. All right. Okay. So let's have a look at it. Now, this is, you're going to like this. I'm sure you are. This is my alpha spread. There's my alpha spread in the chat. You can get the software if you are a member of my channel, whatever. Look at that. Base case. Overvalued by 1%. It's worth 162. Well, today it actually was 163. It was undervalued today on the base case. It's a growth stock. If anyone who's followed my show for a long time, you will know 25 times, 25% over for a growth stock because it grows. You can't buy it undervalued. Today, it was literally base case. That would have been 0. It's just gone up. It's just gone up. 167 already. Yes, undervalue. Worst case, we're not in worst case. Best case, probably in that, to be fair. So good value. It's undervalue. Definitely undervalue. RSI oversold. Definitely 100%. Growth, revenue, 3% up, continually rising. Not a S-curve, but continually rising. Operating income, up 4%, rising. 6%, rising. Free cash flow, up 30%, rising. Look at that. Massive. This most recent earnings. Look at that. Great. 19%. EPS Just a little dip there back in December of down 1%. It's great. Assets, 450 billion. Cash, 95, the right ratio. Cash is 21%. Different for an a software company to have so much cash. I don't mind so much because they're just a cash pile, aren't they? Liabilities, long-term debt, 10 billion. 10 billion. They've got 95 in cash. See, someone said to me the other day, you shouldn't have margin. There you go. There's your reason why. Why do Google hold cash? Why do Google have 95 billion in cash and have 10 billion in debt? They've borrowed money. They make more money on the borrowed money than they do just having it in cash. That's why I buy margin. That's why I use margin. Right? People with money use margin. Not suggesting you do, but big businesses borrow money. Right? Because you make more money from it. Now, look at the gross margin. 58% operating. What we care about is that net margin. That's their moat. After all said and done, 28.6%. FCF margin, 20%. ROCE, 33%. This is good stuff, folks. All up, trending up. ROE, good, yep. If you want to know what these are, the software, look, the explanation pops up when you hover over it. If you use my software, Alpha Spread, this is, you can get a free trial, you can get free software, it's brilliant. You can get all of this. I strongly recommend you do. Look at that. Profitability, 72%. What do you expect? Solvency score, 81%. Doesn't get much higher. We've seen it around about 90, but that's pretty much as good as it gets. Upside, 12%. Outperform worst case scenario, the S&P. 36% on average. 3 times the S&P. Google, best case scenario, 56%. Solid. Yes. Do I need to say any more? No, these are not insiders selling. You go, well, yeah, they are. I can see it. 6.9 million. These are nothing. These are automated trading positions. That's all. Let me give you my roundup for this using the software and its competitors and how it looks and so on and so forth. Are you ready? Okay. Our final part of our review. If you liked it so far, tap the like button and consider subscribing. What do you think? Do you like it? Is it a good one for you? All right. Let's have a look. Forward PE, 18. Not going to read that again. We know what the company does. Unique value. Well, we know what the unique value is, don't we? Well, the competitors include Microsoft, Amazon, Meta. They're all working together. They're all sharing the technologies. I like that. That's not a weakness. Unique value. Alphabet's unique value lies in its comprehensive ecosystem of services and products which are deeply integrated with AI capabilities. The company's robust AI infrastructure, extensive data resources, and innovative product offerings such as the Gemini AI model provide a significant competitive edge. We know that Google is entrenched in all our software, in all our equipment, all our Android phones, blah, 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 blah. We know it's built into everything. We know about the valuations. Google presents a challenging valuation landscape. It's expensive, but getting a lot cheaper recently, with its price to sales ratio at 6, significantly higher than the sector median of 1. This indicates the stock might be overpriced compared to its peers. However, it's dramatically reduced in price since this. I'd like to know when this last did its check. Be interested to know. Here we go. March 8th. This was generated on March. That's interesting. March the 8th. We're March the 11th now. We were already down, but we dropped another sort of, 4%, 5% since then? Let me have a look in the week. Just to give you an idea, 3%. Yeah, about 6% down. 6% down since this was done. That's a dramatic drop. So actually, this makes a big difference. Google's displays strong growth metrics with a year-over-year revenue growth of 14%, significantly above the sector's 2%. There you go. Profitability, net income margin of 29%, surpassing the sector of 4%. There you go. And momentum with a 1 year price 30% compared to its sector with 3%. Need I say more? Revisions with a 28 upward and 23 downward EPS revisions in the last 3 months, suggesting varied analyst perspectives of future earnings potential. Seeking Alpha analyst, don't care what they say. They're paid to say it. Pointless, really. Okay. We're all good. All right. Let me give you my final thoughts on this stock. 100%. With all what's gone on here, it's a buy. I buy it through the S&P. That is the best way of buying it, in my opinion. Really is the best way to buy it. And let me tell you why. So if we go from Google and we look at the S&P, see my position, we go to VU, right? How do you do? And we scroll down and we see the top 10 holdings. Look at this. This is a different one with Google. What do you see there? What do you see? You see Google enter twice. Class A and Class C. 2, 3, 4, 4.25%. So it's the third position of the S&P. Apple number 1, Microsoft, Nvidia, and it beats Amazon. So basically, you're getting 4.25%. 4.25% of. So if you put in $100, you're putting $4.25 thereabouts into Google. But you're putting it more because when you buy Google, right, they all work with each other. So you have Meta, not so much Meta, but Nvidia, Amazon, Microsoft, Apple, all involved with Google, right? If they're doing well, you're buying them as well. So I like Google. Google is a buy from me, 100%. I like Google, but I would just buy the S&P 500, so you're not completely sacrificed by this. But Google is a great buy, whichever way you want to buy it. It's a definite buy from me. This was a review ordered by one of my members, the Peckman. I hope you enjoyed it. I hope it gives you some information that you didn't know before or whatever. But yeah, and I'm going to leave you with one final piece of information that only me and others like me, who might that be, YouTubers, can tell you this information. I can tell you from first-hand experience, ad revenue is going up. My ad revenue is increasing, and I'm not on about how many views I get and I earn more money. I'm on about the cost per thousand, CPM rate. The cost per thousand is how much businesses are prepared to bid to advertise on my channel. I can tell you that is categorically going up. So in other words, I'm earning more money because people are spending more money advertising on Google. Google are earning more money, YouTube are earning more money. So that's got to be a plus, right? It's got to be a plus. So there you go. Google is a definite buy for me. Click above my head for all the links. Down below in the description. Google was founded in 1998, not 2015. 2015 is its IPO. Someone is just mentioning this here. Founded 2015. So Iberian Wolf is saying Google was founded in 1998. We are talking about its IPO. If we go here when it's inception date. So if we go back here and we go to the maximum, 2015, 2004. Oh, hang on a minute. Listed 2004. Okay, so there's 3 different numbers here. It was listed in 2004. It's always good when someone checks this information. It's good. Listed on August 19th, 2004. There is an error there. Let me see why. Punchar, founded 2015. It sounded a short period of time. Let me double check that then as we are here. Thank you so much for pointing that out. Where can we see other information? Just bear with me. Thank you very much indeed. Always like to double check everything. I have no problem when people notice something that wasn't right. I'm going to explain something to you as I finish this review. All of the information that's available, all pulled from the same place. I've spoken to the CEO of Alpha Spread. I've spoken to representatives from Seeking Alpha. And all the information is come from the same pool. It depends what they pay for what they get. Not how good it is, but the more they pay, and they're allowed to access different pools of information. But the information is only as good as what's put onto the system that everyone is sharing. So it's kind of strange that Robinhood have put 2015, and I don't see anything different on Seeking Alpha either, which is kind of weird. That says the same. Isn't that strange? I'm also going to check that now on Alpha Spread. Let me have a look. I like to always check this. It's completely messed up the video, but it doesn't matter. I like to check all the details. Overview. I'm seeing 2015 there as well. I'm seeing 2015 on all of my software. Alpha Spread, Seeking Alpha, you name it. So I couldn't answer you why that pool of information is being given out like that. I honestly, I wouldn't know. Google was founded in 1998, not 2015. Well, we've got difference of numbers there. I honestly don't know the answer to that. We can see the inception date when it listed was 2004. 2004. Hang on a minute. It wasn't traded. So, hang on. 2004, 2015. Ah, there we go. 2000. That's interesting then. So 2004, it was listed, but unavailable. It was available 2013. So we are right. Iberian Wolf, we are right. You could trade it publicly from 2015. That's right. So now I understand. So Iberian Wolf. I wish I hadn't spent the last 5 minutes doing that now, but actually it does make sense, and I'm glad you pointed that out. Google Class C, the tradable stock for the open market, the unvotable one, the general retail stock, was in 2015. Thank you very much for bringing it to our attention, and it really makes a difference. Yes, if we look back here, all the way back, 2004 was registered, but you could not trade this stock until 2015, right here. And that is what Robinhood is saying. Class C was 2015. The other stock is the Google L. That is the stock where you have voting rights. So yes, it was available earlier, but Class C for the average normal retail investor was 2015 when you could start trading it. I now hope that makes sense. Doesn't change a damn thing when it comes to my review whatsoever, but it's good to get it understood. So Iberian Wolf, thank you so much indeed for correcting me. I wasn't wrong though. This stock was only available in 2015, as I originally said. I like Google because it's a solid, etc., and especially because when Nvidia and Palantir dropped 10%, Google doesn't. It's like a grown-up stock. I agree with you totally on that. Palantir is insane. I wouldn't touch Palantir with a barge pole. And Nvidia, as good as it is, trades like a meme stock. Google is much more grown up. It's like the S&P 500. Sensei also chimed in and said that's when Class C stock was founded. That is correct. You need to look at Class A. I don't need to look at Class A. They're both exactly the same. How they trade, the principle, the analysis, the review would be the same. But Class A is the original. Yes, you're right. The stock where you had the voting rights. Absolutely right. But the retail investor buys Class C. Okay? You're both right. We are both right. What a funny way to end our review. But yes, we're both right. The stock was created later. Whatever, blah, blah, blah. Anyway, Google has been trading publicly since 2004, but not this particular stock. Hasn't. Dylan Wilson, GOOG since 2015. Correct. GOOG. All right. No Class A has been tradable since, for much before 2015. There you go. You could trade Google since 2003. My God, we're going backwards and forwards. It doesn't change the review, everybody. Everyone's giving me different dates where you could buy this one and Can I just take control of the situation? It doesn't matter. You still own the same business. Which stock you bought at what time. In fact, it reminds me of the S&P 500. Whether you bought VU or SPY or many others, you still own the same trajectory of the S&P. You bought them at different times, different inception dates when the funds were set up and blah, blah, blah. But they're all still tracking the S&P 500. Yeah, since 2004. Yeah. Everyone's happy. Not show my age, but I was online the day Google went live. We were laughing at their name. Yes, Google. When it first came out, it sounded strange, right? Now it sounds quite normal. Well, what a way to end a review. Bonkers, if you ask me. Click above my head for all the links. Down below in the description. I'm not going to edit this out. I'm going to leave it all in. So you can see when I was wrong, but I was right, but I was wrong, but I was right, but I was wrong and right, all at the same time. Shall we leave it like that? Until next time, above my head, down here, over here for the Google playlist, down here for the full review playlist with like 300 stocks. Until next time, blimey, I got to the end of it. Was it really worth $6? I don't know. Take care of yourselves and each other.